everyone. Welcome to our Industry Roundup segment with CIC Holdings PLC. For today's session, it's our pleasure to have with us Mr. Aroshan Serasinghe, the Group CEO, and Mr. Viraj Manatunga, the Group Chief Strategy Officer and Divisional Director of Pharma. We welcome you both warmly to our session.
Thank you, Shalini. Pleasure to be with you. Thanks.
Thank you.
Our questions today will give an overview of the main segments of CIC Holdings. So to start off the session with, let's move on to the crop solutions segment, which is the top contributor to CIC's performance, both in terms of the top line and the bottom line contribution. So how would you describe the market dynamics of this crop solutions segment with the Maha cultivation season and the recent spell of dry weather, which was now followed by rains?
Thanks, Shalini, for that question. Basically, compared to last year, if I go back before Maha, I think Yala, most of even the competitors have had access to dollar liquidity, have the ability to bring in more stocks of fertilizer and crop inputs. So we are, sort of in relation to the environment, the dynamics have changed from last year. And the economy also, coming back to some degree of normalcy, with exchange rates also stabilizing around 320, 330 level, interest rates having come down, we see there is an increased demand for food and thereby for agri inputs as well. And in terms of agri inputs, if I may just very quickly specify, fertilizer segment is rather a red ocean. There's increased competition, so there is significant margin pressure on the fertilizer side. But whereas if you take the fungicides, weedicides, and specific inputs, those who have strong brands, there is significant pull from the farmer level as well for these. So we see a lot of optimism, positive aspects on crop solutions, volume to grow, whereas the price we will come down certainly from what we have seen. In terms of the weather, what we have seen, this was more like depression and intermonsoon showers. I think the key is going to be the rainfall in December. As you rightly said, with Maha coming, and rainfall in December will mitigate the impact of whatever the El Nino levels which we are looking at. If that happens, we can expect a very good sort of Maha season, along with very positive attributes on the entire crop solutions cluster.
The local poultry industry went through some of the tough times in the recent past. So as an integrated livestock player, do you see these challenges easing off, and what is your outlook for the upcoming quarters?
Yeah, thanks. Actually, on the challenges in the recent past, there were a plethora of challenges where there was government intervention, pressure to reduce the price of chicken, then the whole thing about the egg prices and so on. And with that, there was intense competition, so much of undercutting where one was trying to hold on to market share and gain market share amongst the competitors. And also from an economic perspective, you found that you were still working within a very narrow sort of bandwidth on the chicken consumption side, and also feed millers were struggling to dispose some of the materials which they had bought at a higher price point, and they were sitting on stocks with high costs, and also with the availability of raw materials and all that, which is freely available. So all these things have sort of played out, and in the current context we see certain improvements coming in across the value chain, from the feeds, poultry processing, and towards the downstream side, even wet care. Again, with the stability of the currency, the cost of raw materials, even global, coming down, and also with the tourism sector booming currently in terms of the volumes coming in. The consumption levels for chicken we can see it's improving. And also even at 1300 level, chicken I believe is still the cheapest form of protein relative to fish, because the fish prices are much higher. So it's showing a positive a trend, and we would expect this positive trend to continue at a greater level when you look at third quarter in the financial year, especially coming into the December season, the new year. So definitely, yes, a lot of positive attributes to be looked at coming into the season on the overall chicken consumption, and global raw material prices are coming down on the feed side.
Okay. So, if we move on to the health and personal care segment, could you give us a brief update on the segments that CIC is into, subsegments, pharmaceuticals, medical devices, and the personal care segments, and what new developments have come up in terms of both local manufacturing and the export markets?
Okay, Shalini, there are a couple of sub-segments as you mentioned we are in. When it comes to pharmaceuticals, we are into pharmaceutical agency as well as manufacturing business. Then when it comes to devices, medical devices and the surgical items, we are into agency business. And then we have our link range where we are into herbal healthcare and personal care, as well as traditional Ayurvedic oil range. So those are the four verticals that we represent under healthcare segment. To give you an idea about the pharmaceutical segment, it's a very challenging environment in the macro industry perspective, because as you know, in the healthcare delivery, it is divided into two aspects: inpatient care and outpatient care. Outpatient care is equally divided between private sector and the government sector. So the challenge that we face as of now, especially when it comes to the lower levels of the income pyramid, the government OPDs do not offer medicine as much as they used to do earlier. So we see some churn taking place there to the private pharmacies, but the people who cannot afford such medicine purchases, either they compromise on the prescriptions or they completely give up on the medicines. And this is something that we have observed, especially for chronic care, not much for acute care, and which, in our opinion, can lead to bad impact on areas like uh, overall health of people, the quality of labor force participation rate, etc., in the coming years. When it comes to inpatient care, still government maintains about 85 to 90% of inpatient care delivery, and private sector is also struggling in that aspect, especially patient footfall is being coming down due to the unaffordability of the channeling prices, procedure prices, etc. So overall, it's a challenge. But in this challenge, what we have observed is the market positions of pharmaceutical players have also been challenged, and more than the original branded products as well as the branded generic players, the generic products which are priced at a lower or medium price point, they started moving. And more than the KOLs or the doctors, pharmacists has become the opinion leader when it comes to certain ailments. So, of course, there is a negative impact on overall basis, but there are some growth boosters as well. Sri Lankan pharmaceutical sector is still growing. Last year, the growth was around 34%, mainly driven by the price. Volumes have come down by about 20%, which is an alarming fact. But volumes will gradually recover because with the inflation coming down, at least not the full who lost the market, at least partially, the patient will start getting back into their prescription, getting back into their diagnostic habits, getting back into channeling centers as well as the hospitals in search of their medication. So the hope is that there is a positive hope into the industry recovery, but it's a very challenging environment that we encounter as of now. Despite the challenging environment, CIC pharmaceutical sector has done really well during the last two quarters, registering a very high growth in comparison to the industry growth as well as the growth of the competition. When it comes to medical devices sector, of course, surgeries are taking place, but not at the rate that we have observed earlier, because government procurement of surgical and medical devices were curtailed due to the lack of funding, especially dollar funding. So the government has to be dependent on the Indian credit line, ADB credit line, and whatever the fund allocation coming from the treasury for their procurement. So it will stagnant going forward for the next year, but we will try to consolidate our position, enabling us to take the advantage of the growth cycle, which is expected in the year 2024. And then coming to herbal healthcare and personal care range, we had a very good year last year, and this year, our expectations are high, but the market is stagnant, because you see when it comes to the general trade, where most of our herbal healthcare products are being sold, these shops are being challenged because the bank borrowing rates are still higher, though it is in the declining trend. Those shop at the corner finds it really difficult to honor their payment, and there are a lot of outlets which are being closed on regular basis. That will keep a lid on the growth, but overall sentiments are positive. And in the herbal healthcare range, we have introduced a lot of new products, because as you all know, Link is known for their R&D capabilities. So in terms of personal care as well as herbal health care, there are a lot of products that the recent addition to the portfolio is Earth Essence range, a complete range of herbal personal care range, which would have you would have seen the ads are running on, a lot of awareness programs are being created around that, to capture the trend which is more towards the herbal when it comes to personal care and wellness. In terms of pharmaceutical manufacturing, I'll make it very short there. It's quite positive for the year 2023 and 2024. Our order books are filled as of now. However, there we are trying to get government policy set up on local manufacturing, because if you take the neighboring countries like India, Pakistan, and Bangladesh, they have stronger policies, and they have identified their own opportunities into pharmaceutical manufacturing. Without such a definition, it is very difficult for a small country like Sri Lanka to move ahead. So these days, industry, ministry, as well as WHO trying to develop a roadmap in that regard. So it is more a hope that we have when it comes to pharma manufacturing. So over to you, Shan.
And if we move on to the industrial solutions segment, it has been a strong contributor to the group's performance. But with the last quarter, we see somewhat of a slowdown in the numbers, especially in the backdrop of slowdown in the construction sector, and also the challenges faced by apparel exporters. So, what is your outlook? What is your take on this sector in the upcoming quarters?
Thanks, Shalini. Actually, the two specific areas you mentioned, yes, there is a significant slowdown, as we all know, on the construction. Recovery of construction industries, I believe, dependent on certain inputs, such as steel, cement, all those prices coming down, and demand has been sluggish, even for our paint, the binders, and all that. And also, there's a drop in demand for estate chemicals in the rubber production globally. On the construction industry, we feel, I mean, we really don't see a very quick recovery in the next few months. So it might be a bit difficult to provide a specific sort of time horizon for the construction industry recovery. Whereas on the textile side, because we are one of the key input suppliers to most of the leading garment textile manufacturers, where, as you said, last quarter, this has been fairly sluggish. Again, I mean, similar to the latex thing, it's all dependent on some of the overseas global market outlooks as well. Most of the garments, some of those stocks are still with foreign customers, and the stocks have still not been liquidated. So the order books have been there's been a slowdown in those order books, and thereby impacting our sales as well on the textile dyes side. But we feel we're expecting the apparel exports to gradually start recovering in 2024. But in an overall sense, when you divorce the two, the construction and the apparel side, we also supply. There are a lot of manufacturing inputs which are being supplied, and we see a fairly positive outlook in the immediate few months, and we have seen that also in the second quarter as well for other sectors where we supply key manufacturing inputs.
To sum it all up, in the current context, one of the key challenges faced by the businesses was the erosion of consumer purchasing power. So, do you feel that bottomed out? And in your opinion, what sectors would be quick to bounce back?
Some of the low hanging fruit, I mean, with regard to the agri inputs, as I said, volumes are recovering from last year. I mean, if you compare last year's volumes, were considerably lower with the high price points, and now you can see the prices coming down. So we expect a greater volume on the crop solutions and the agri inputs. This will be the trend with regard to agri inputs. With the price reduction, industrial solution segments, barring construction, I think there will be a reasonable rebound of manufacturing inputs also. A gradual recovery in 2024 for textile exports and the dyes which we provide. For the feeds group, as I said, we expect the purchasing of chicken to improve in the coming quarters, especially with boom in tourism and the December, the Christmas season and New Year coming into play. I think these are some of the low-hanging aspects. If you very quickly look at feeds, industrial, and agri inputs, I believe that would be the scenario that would sort of play out in the next few quarters.
Yes, so that brings an end to our BRS Industry Roundup segment with CIC Holdings PLC. We thank Mr. Aroshan Serasinghe and Mr. Viraj Manatunga on behalf of BRS and our clients for sharing your valuable insights and setting aside time for us amidst your busy schedules.
Thank you, Shalini. Thank you for inviting us and having us
Thank
on
you for
board.
having us.
Thank you.
It's a pleasure to have you.
The smart way to grow your money. Contact us today to invest wisely. Bartlett Religia Securities.